Hello guys, fellow dividend investors. It's that dividend guy coming at you with another dividend investing video. Happy Thursday. I hope everybody had a great green day in the market today. I'm going to go through my portfolio performance, my individual stock performance, and then I'm going to go through a couple ideas that I had for stocks, maybe alternatives to SKT for the dividends this month. So let's take a look at the portfolio. Today we are down about $100 plus dollars, down about 0.69%, about 0.63% actually. For the week we're up 262 or 1.6%. For the month, we're down 202 or 1.2%. 3-month mark, we're up 379 or 2.33%. For the year, we're up $2,100 still or 14.7%. Eventually, I do think that the volatility in the market will be reflected in my year. It just will take a while to get there, I think. And then all time, we're still at 14.65% or $2,100. So 14.7 for the year, 14.6. So about 14% for the year, and almost for the 2 year mark, we're at 14% as well. 2 months, it'll be 2 years, my 2 year anniversary on the 13th of putting cash into Robinhood. So that's pretty awesome. We'll see where we're at, but even in the year, guys, 14%, that's double the S&P in a year. That's phenomenal. And then if my 2 year mark even gets above like 9 to 10%, even if it's even, that's something most fund managers can't do, is even match the S&P. So it's not really a contest, but it's just a good benchmark to kind of compare yourself to. I'm not investing at all. Like, my goal is not to beat the S&P 500. This is just to have a long-term investing horizon philosophy. Try to dabble in a little bit of a value investor's mentality on great dividend companies, great dividend aristocrats that have paid, or kings that have paid dividends for 25 to 50 plus years, and have a little bit of value in there as well. So not doing too bad for an investor who's been at it for 2 years. I've read a lot of investing books. I've read a lot of investment like philosophies, that type of thing. Benjamin Graham, Warren Buffett, very inspired by those investors. People have come before me, and the big thing that I try to do is I try to learn from other people's mistakes, so I don't have to make them. Because I feel like if you want to be the best at something, you study the best and you kind of mimic their moves, and hope for similar results. So that's obviously working for me here. And I hope to continue that strategy and really live through it, like live it to the fullest in my investing philosophy. Because the thing with the market is nobody knows what it's going to do, right? You can't predict the market, and so short-term volatility is inevitable. That's just, it's like the snap. Like it's just going to happen. Your market, your overall portfolio performance is going to fluctuate a lot from the day to day. That's why I don't really worry about it. This is a long-term strategy, but it's even working in the short term. But keep in mind that's because we've been in a 10, I think now 11-year bull market. So everything, if something's up, it's up because the economy's up, right? Doesn't mean like even bad businesses can do good in a great economy, right? The time tested strategy is to pick stocks that have performed well in spite of a bad economy, right? So they've done well. It's easy to do well when everybody else is doing well, but it's really hard to do well when the economy goes down. And those are the companies that I'm after. So theoretically, if you pick companies that are great or perform even subpar, even like market matching in a bad economy, they should soar in a good one, right? And the funny thing is, a lot of these dividend stocks right now aren't even performing that great. Some of them are, but a lot of them aren't. So it's kind of funny that when the market is flying, you see stocks like Amazon, Tesla, Facebook doing very well in a bull market, where stocks like 3M, Johnson and Johnson, and like Coca-Cola, some of them are up a bit, but they're not like soaring like a Tesla or growth stock would be. So it's just funny that dividend stocks don't get the same grace in a bull market that a growth stock does. But I think that's really what it is growth stocks are more defensive, where I'm willing to sacrifice some profitability to get some safety, right? And that's kind of my investment philosophy, is I'd rather play it safe and not cash out on my stocks like a growth investor has to do in order to get profits. I'd rather hold great dividend paying companies that will compound, because in my opinion, I would much rather get, a $3 million portfolio versus a $600 boost up from a Tesla stock in a day, right? That's just me. I don't because to me that seems like gambling versus investing. So that's just me anyway. But let's jump right into the individual stock portfolio. Keep in mind, guys, this is a long-term dividend portfolio, and I don't mean to bag on like Tesla, Amazon, anything like that. I love those stocks. It's just it's not how I invest, right? And if you're here, I think that you don't invest that way either. And I might dabble in it someday when I have extra cash and I don't mind losing money or kind of risking a little bit more money in a growth stock. But for right now, I'm gonna be the tried and true investor, just like Warren Buffett, Charlie Munger, Phil Town, that type of thing. So let's jump into the individual stocks real quick. So today, let's take a look. Altria up 25 cents, 98 shares, almost $4,500 of equity. 45.30 is our average cost, so we're up like 35 cents today on the stock. 27% of the portfolio is in Altria stock, $24 today. We're up $33 long term. So like I said, great defensive company, not doing great in a bull market. Coca-Cola, same thing, up 20 cents today, 17 shares, $1,000 of equity, 51 cents our average price. 6% of the portfolio is in Coca-Cola. Really want to build this one up. $3, almost $3.50 for the short term. We're up. Long term, we're up almost $145, or almost 17%. AT&T, this one's been a free flyer for right now. 62 shares, $2,300 of equity, 31 cents our average cost. 14.5% of the portfolio is in AT&T stock, $17 up today. Total, we're up $447 or 23%. Next, AbbVie, 95. Ooh, this took a dive today. That's good. $95.40, down $2.44 today. 60 shares, $5,700 of equity, $72.22 is our average cost. So even with the drop today, we're actually not down. That's what I love, buying low. Down $143 today, or about 2.5%. Total, we're up $1,300, almost $1,400, a 32% return on AbbVie stock because we bought it so low. It has jumped literally $20 since the Allergen acquisition, and it's been pretty steady around the $90 to $94 range since then. So that's great. Next, we have Tanger, SKT. This one's my favorite because it's the most hated. We pretty much broke even today. Down today in the market, but up 5 cents, so we didn't lose anything. We broke even. 5 shares, $65 of equity. That will be doubling because, excuse me, that will be doubling because SKT is a stock that I've decided to put the AbbVie dividend, the AT&T dividend, and the SKT dividend into, and I should be doubling my stake. I believe I'm going to buy 6 or 7 shares, which should be $2.20 added to my overall position, which is phenomenal. So that is great. That's the goal anyway. And eventually, I believe it's like 27 shares. I'll be dividend efficient, but I should be buying 35 shares of SKT this year, just with the AbbVie and AT&T dividends alone. Adding the SKT dividends in there as well, it should be a little bit more. So $65 of equity, which will be doubled. $15.29 is our average cost, so it's a great buy right now. Let's hope tomorrow it stays this low, so when I buy it with my dividends from AbbVie and AT&T, if I get them before the market closes, I can put it back into this stock. So today I break even. I'm down $10, almost 11 with this stock, which is fine because I'm going to buy more. Target, this one's been a flyer as well. 10 shares, almost $1,200 of equity, $87.68, just like AbbVie. I bought this super low. 7% of the portfolio is in Target stock. We're short. Right now in the short term, we are up $1.70. Long term, we're up $306, 34, almost 35%. That's the best return that we've had so far in the portfolio is Target stock. Then ExxonMobil, we're down big. It will be paying us a grand total of $25 in dividends, which is awesome. Next month, 29 shares, $1,700, almost $1,800 of equity. $73.50 is our average cost, so we're down big. Almost 11% of the portfolio is an ExxonMobil stock. This should be another great buy. Today we're down $9.28. Total, we're down almost $400. That's the down dog of this portfolio is ExxonMobil. But keep in mind, fellow dividend investors, I'm not bagging on the stock. I'm just reviewing the performance. I love ExxonMobil. I bought it because I know it's a little bit more volatile because it is oil, and I know that they've paid for a crazy long amount of time. I believe they're behind York Water, and there was some electric company, I believe. I think they've paid dividends for like the third longest in the market. Like they've got a really crazy long streak of paying dividends. Not necessarily increasing them. I know they're at least an aristocrat. They don't have a great track record of increasing dividends, but they have enough for me, enough for my lifetime. So I will happily keep putting money into it. And I know we're going kind of against the grain with investing in an oil stock, but because people say that oil's on its way out due to Tesla and electric vehicles, but I still think we're about 5 to 10 years away from people actually buying electric vehicles like a normal thing. I think a lot of it will still be fuel carbon based, and I think it's still a pretty safe investment because people, for a while, they'll at least be doing gas driven powered vehicles. So down big on that, and I do realize spending habits are changing in the car market, and manufacturers are falling because Tesla's changing the landscape, and I think that's great. But I don't think Exxon or Chevron. I think they're big enough to withstand a change in consumer behavior, and they'll be able to adapt relatively quickly to the changing market. Then we have Walgreens, one share 53.57. We're down on this. 54.60 is our average cost. 0.3% of the portfolio is in Walgreens. Today we're down 90. Total we're down 103. Haven't lost much in that stock at all. So for the dividend payments, as you guys saw, I'll go just dividend payments. So I have $1.78 coming to me from SKT, which is not enough to buy a share. Obviously, it's just extra for cash flow. But 70.80 is enough to buy another share. So with that, I will have over about $104 to my name in my Robinhood portfolio, which is it's phenomenal. That's just money, interest on my money that companies are paying me to reinvest. So I will be putting that into SKT stock, and currently at the prices that where SKT is sitting at, I should be able to buy. I only have $36 right now, like 37, but with $104, I'm almost to 8 shares, but I don't think I'll have enough. I think I'm at 104 something, so I think I'll be sticking with 7 shares right now. But when Exxon pays me March 10th, I could buy another two, almost 3 shares of it with the SKT and the AT&T dividend. But originally the plan is so my plan for the dividends this month is to put it into SKT stock, and then with the dividend from ExxonMobil being $25, I should be getting about $90 from Altria and Coca-Cola next month, I believe. And with that money, alongside the ExxonMobil $25 dividend payment, I plan on buying either 2 shares of Altria Group to get an even $100, or I could split it between Altria and Coca-Cola. Kind of depends on what I'm feeling there, but I'll let you guys know. But that's the deal with the dividends for now. I'm going to put it all into SKT stock, double my shares, and then next month with the extra money, I will save it until March, April, and I'll put that into either Altria Group with 2 shares or buy a share of Coca-Cola and Altria Group. Kind of depends on what I plan on doing there. But anyways, guys, thank you so much for watching. Today we had a little bit of a down day, but of course we're long-term investors here, and that doesn't bother us. So it's awesome to see that the portfolio is still growing and moving, whether it's positive or negative. With the dividend payment that I'll be getting tomorrow, I should be breaking even with the losses today anyway. So thank you guys so much for watching. It really does mean the world to me. I post Monday through Friday on my dividend portfolio because the market changes, my value changes every day, and I think it's fun to update you guys and analyze it every day. So thank you guys so much for watching. Remember to hit that subscribe button on that Dividend Guy YouTube channel, and when you do, hit the bell notification so you don't miss any updates on my dividend portfolio. I also have that money quiz that Graham Stephan did with his girlfriend. I took that. I got a pretty decent score compared to most people, and I have like how to invest in 2020, how not to invest in 2020. I have a lot of stuff coming out, so and a couple Motley Fool articles that I've gone over as well. So I have videos planned for you guys outside of the portfolio. So plenty of content coming, plenty of reasons to subscribe. So thank you guys so much for watching, and I'll see you tomorrow with another dividend investing video. And keep in mind, tomorrow we do get those dividend payments, and if I do get paid before the market closes, I will be doing that trade live. So thank you guys so much for watching, and I'll see you tomorrow in another dividend investing video. See you then, guys.